Finally, Russell Napier, co-founder of Eric, the online research platform, and author of Anatomy of the Bear. Thank you. Finally, you and I have got our schedules aligned and can sit and have a chat about financial history. Just for those few amongst the audience who may not know who you are, can you just run them quickly through your background, and then we can dive into all the things that you're fretting about at the moment?
Yeah, sure. So it is good to finally catch up after numerous attempts.
Yeah.
I started in this business 26 years ago. I was briefly on the buy side as an investment manager, but for most of my career I was working for a company called CLSA on the sell side, writing investment strategy since ~95, visiting large institutional investors, talking about asset allocation, initially Asia-centric, but then globally. But I went part-time quite early on in that career, so I could do other things. So I run a course in finance, I sit on the board of a couple of investment trusts, I on advisory committees for some fund managers. But the theme that runs through that is financial history. So I run the course in financial history. I try to incorporate it, if at all possible, into my work. I've written the book on financial history, so you can see that it's all there. So people say it's just because I come from Northern Ireland that I've got an undue interest in history. This may be true, but I do think it can teach us lots of lessons, particularly when politicians decide to get involved, which, believe me, if you go to business school, there, as far as I know, there just isn't a unit on how politicians don't like the price and what they do when they don't like the price. So it's, I think it's useful.
So actually, that's a great place to start, this idea of not liking the price. And it seems to me that in recent history, and we'll go a bit further back in time, but the actions they're taking to try and get that price to be what they want are becoming more and more desperate. And not only that, but more and more dangerous. I mean, let's start with Europe, because there's so much history there in Europe. Just give us your take on Europe, because I know that I've read some of your recent stuff, and you and I chatted briefly before we started. Europe is at a crucial point, but no one seems to be paying much attention at the moment.
No, they don't pay attention because it's politics.
Yeah.
And as I said, I often do conferences, and I will ask people in the room to put their hand up if they have a degree in politics. And it's not even 1%. Now, if you ask them any about business and finance, the hands shoot up.
Yeah.
So people who educated in that way, particularly people with less experience in the markets, I would say, because if you have experience in the markets, you come to understand these things, or nobody understands them. You have a better grasp of these things. They just don't get it. They can't cope with it. They don't want to analyze it. They don't want to talk about it. As far as they're concerned, I'll just buy good companies. I'll stick with good companies. Right. Everything will be fine. That'll be what I'll do. Now, that didn't work out so well in the great financial crisis. Nothing to do with politicians, but to do with more not understanding money and credit. But this time, they don't want to get to grips with the politicians. Now, if you begin to say, well, I think Europe is in the process of certainly the euro is in the process of dissolving due to political reasons, nothing to do with economics and finance. For economic and finance reasons, it should have been falling apart for years. But clearly politicians are prepared to bend just about every rule to make it work. So if you say, well, the call now is not that financially and economically it's failing, but politically it's failing, they say, well, you can't assess that. You can't understand that. No one can understand politics. And yet, clearly, if you've read a bit of financial history, you can't forecast with 100-degree accuracy, but politicians may ultimately be more forecastable than the prices you're trying to forecast every day.
I work with a guy in Singapore, Steve Diggle, who's did a PP&E degree at Oxford, and was so tuned into that world. And he said something to me that's resonated with me for years. He said, look, just understand that these guys, all they care about is being elected. And the day they get elected, all they care about is getting re-elected. And if you filter everything through that, and these grand plans they dream up, and this unwillingness to admit that, hey, you know what, maybe we screwed this up, we should change it. He said, you'll understand what happens and we'll be able to forecast. And he's been absolutely right.
Well, I think we're already getting to pop.
What we're showing you here on our YouTube channel is just the tip of the iceberg. No matter where you are in your financial journey, whether you're a beginner just looking to break into the market or a financial professional looking to up your game, Real Vision has something for everyone. Every day, our team of expert journalists provides in-depth analysis, written reports, access to live streams, and access to our community, The Exchange, where you can interact with people just like you from all over the world. For just $1, you can unlock all of this and more at realvision.com. Try our Essential tier. If you like what you see, it's only $20 a month thereafter. So click on the link in the description, go to realvision.com, and see what you think. We look forward to seeing you there.
Willingness to admit that, hey, you know what, maybe we screwed this up, we should change it. He said, you'll understand what happens and we'll be able to forecast. And he's been absolutely right.
Well, I think we're already getting to popular culture here, because you remember A Few Good Men, where Nicholson's in the box. He said, you want the truth, you can't handle the truth.
Yeah.
Well, for a politician, the price is the truth.
Yeah.
Frankly, they can't handle it. But that's not a surprise, because it has ever been thus. If a price delivers what they want, and frankly, since we began the deregulation process, which let's date that to sort of the late 1970s, the price has pretty much delivered what they wanted, growth, and that's what gets you elected. And then you wake up one morning and the price doesn't deliver. Now, there are people who went to business school who think, well, no, they're ideologically committed to the neoliberalist idea. No, they're ideologically committed to getting re-elected. And if they have to suspend the price or close the markets, and remember we've actually seen some markets effectively closed, if you think of Greece and Cyprus, Iceland and many in the emerging markets, I'm thinking of currency markets here. If it means actually closing a market, they're quite capable of doing that, and they've done it throughout history. So this is people call it an unknown, but it's not an unknown. You can look at what they face, the choices they face, and to get elected, you can have a reasonable degree of forecasting what they'll do to get elected. And that is, if you're going to try and preserve your clients' money or your own money, understanding that dynamic is very important.
I mean, so many people have been wrestling the last couple of years with what everything they've learned has told them they should do, and somehow throwing all that out the window and just saying, okay, they're going to keep doing this, it's going to keep going up, but I'll be able to get out. I'll be the guy that manages to get out before this whole thing falls over.
Well, imagine if you were a very good soccer player. You played soccer all your life, you were very successful, you're top of the game, and you're on the pitch one day, and you're not playing 11 guys, you're playing 11 guys, and the referee joins on their team. Now, you're playing a different game, and the skills that you learned may not be as valuable, still valuable, but not as valuable as had before, because you're playing a different game, and that's what happens in this business over hundreds of years. The game changes. The game has changed. So there are many fund managers who are brilliant and excellent, and they're just giving up.
Well,
because they realize the game changed, and they realize that their skill set is not necessarily the skill set for this game.
Well, and we've had this problem where people have had to essentially, unfortunately, the number that these guys are trying to create kind of works for the investors at the moment. They're trying to get equity markets higher. They've managed to levitate bond markets to, extremes the like of which none of us could have ever foreseen. So it's kind of working at the moment. What do you think happens? Because I think we all know this can't go on forever.
Yeah.
What do you think happens? What do you think the signs might be that it's starting to get to that point where people say, okay, I now need to invest not on where I think they're going to be successful, but where I think they might fail?
Okay, well, I think that's a great question, because really this whole process is going to come in two parts. One part will be central banking, and the other part will be government. And I would argue strongly, you really ain't seen nothing yet in terms of the government. It's all been central banking. Yeah. Now, investors, professional investors, have learned how to play the game against central bankers. They're not that dissimilar to investors themselves. They're kind of forward-looking. Mm-hmm. They're trying to, they're looking to the future. They're looking at inflation. They're taking actions, and you can game them to some extent. And they've been gamed. They've been royally gamed by the financial market system. And I think they actually know they've been gamed by the system. Now, if that's all there is, more monetary policy and more monetary policy and more monetary policy, then we can continue to game them. But if it switches to government, then I think it's a completely different game. So we've seen a little bit of it already in terms of government action and regulation forcing people to buy that debt, but primarily that debt's been bought by central bankers. Now, we're on the cusp of that today, because I believe central banking isn't working. It is not reflating the global financial system. No. It is not producing growth in nominal GDP above the growth in debt. The debt to GDP ratio is going up. So we're passing the baton. And in fact, you read it in the newspapers every day, and people actually, I think, very, very wrongly get excited about this. They say, oh, it's going to be a fiscal answer now. Well, the 9 most dangerous words in the English language are, we're from the government and we're here to help you. So to me, it's bizarre that people who are the stewards of other people's capital are getting really excited because the government is coming. And we can maybe talk about lots of stuff that's in the baggage with that fiscal expansion when it comes, which are the tools of financial repression. So it's now, if you think central banking is failing, the first thing we know, based on your initial analysis, that they don't give up, they want to get re-elected, is that they'll come back with something else. And if you could imagine a US in recession, which is not a forecast, but if there was a US in recession and President Clinton goes around the room and asks her cabinet what happens next, I don't imagine there'll be much heed paid to the central banker. Because the central banker has done immense things since 2009 and it didn't work. It'll be paid to Secretary of the Treasury Krugman.
Right. Oh, you're painting a nasty world here.
Well, I'm just saying that that's what we should expect. We should expect that people think that all you get is central banking, and that has made us money. But there is something else that comes in this process of if central banking fails. And those things are much more challenging, actually, even than the ultimate inflation, because they are a form of price manipulation via government fiat. We've got price manipulation effectively through the central banker, the referee becoming a player. Now, this is FIFA changing the rules.
Which
when
the
government gets
involved,
let's face it, if you know anything about FIFA.
Yeah. Well, let's talk about financial repression, because I know it's something you spend a lot of time focusing on? I mean, do people really understand what it means? Because it seems to me that they really don't. It's kind of this esoteric idea, but until it really touches you in a really overt way, it's kind of just, it's a bad notion.
Yeah, they don't sort of go down the rabbit hole, and that's what it's like. It is going down a rabbit hole. It's one control leads to another control, leads to another control. We need to define it first.
Yeah.
And the simplest definition of financial repression is keeping the yield curve below inflation. So like that sounds easy, and people say, well, I'll just not buy any bonds and everything will be fine. Yeah. Well, no, it is much more complicated than that. The reason for doing that is to bring debt to GDP ratios lower. But you and I are not stupid, so if we saw that the government was about to hold the cost of money below inflation, we might borrow money. But wait a minute, they're trying to bring down gearing, but the incentive to you and me is to gear up in this scenario. So they have to bring in other things, measures to stop you and I gearing up, which is the elements of financial repression. They have to try and force you and I to buy government debt, even though it is a virtually guaranteed loss-making proposition. And they have to bring in controls that would stop us behaving naturally as a response to negative real interest rates. Now, those historically have been some horrific things. I mean, capital controls is top of the list of things that are horrific if you're an investor, because if I can kind of paraphrase Mrs. Beaton, you can't shoot fish in a barrel unless you put them in a barrel.
Right.
And the first main tool of financial repression has to be capital controls. But it's dividend controls, it's higher corporate profits, it's all the things that have to make other investments look less attractive relative to government debt. And just on the timing of that, I mean, although people think central bankers will keep going forever, but if we ever got inflation, they clearly have to stop expanding their balance sheet, but somebody has to buy the government debt. So let's say the fiscal policy comes, it succeeds, we get growth, we get inflation, central bank balance sheets cannot expand in the growth and inflation. So who's going to buy the government debt? And the answer is you are.
Yeah.
Particularly if you work for a regulated financial institution. It's much better if you're an individual, but regulated financial institutions are the people who will be expected to do that. And that is financial repression. I can think of about 50 other measures they might get to as well.
Well, let's talk about some. Let's go, because you're right. That's the obvious one, and whether they mandate pension funds to hold a certain percentage of their assets in sovereign, whatever. There's plenty of ways they can do. But let's go past that to some of the things that you've thought about that perhaps other people haven't, because you need to be ahead of that. Because I think you're right. That's coming at some point.
Well, I think it's the capture of the banking system and the politicization of credit, which is already well underway. So I call it capitalism with Chinese characteristics. So it changes the whole nature of how credit is available and not available. So for roughly 3 decades now, credit is going double to 3 times as fast as nominal GDP. Now, in that world, any idiot can make money.
Yeah.
I mean, and that's what's been happening. Many idiots have been making money. What do? You buy an asset and gear the hell out of it. Sit back and wait. Now, whether that's private equity, property, that's been the game. Now imagine a world where debt is supposed to grow more slowly than GDP. And once again, you're the government. Now, the most important thing for you to do if debt's to grow more slowly than GDP is to make sure that the people who get it are A, the government, and B, people who vote for the government. So who's not on the list? Who's not invited to the Christmas party? Anybody who gears the hell out of assets, frankly. I think that's probably a good idea, in my opinion. But is that going to produce good returns from the assets? If you spend 3 decades gearing them up, and then we have to go through a period because we have to control the flow of credit, it's going to be slower. It has to go to what they will define as productive, not speculative, and I think Theresa May have already used that phrase, then those assets will be de-geared. So we could be looking at a prolonged period of re-equitization of the whole financial system. It would happen tomorrow morning on the passage of one piece of legislation. The government bans the deduction, the ability to deduct interest in the computation of corporation tax. Instantly, you've got a huge change. Now, do you think asset prices would go up in that environment? But it seems to me that that policy actually would be a prime policy for financial repression. And I think if taking a longer term view, if you look at the structure of what we've built, it wouldn't be a bad thing in the long term. You'd have to phase it in slowly. But these are the things, if you begin going down that rabbit hole of financial repression, these are the sort of things that you
But
get
this is the problem to me, because as you said, these guys are being gamed by professional investors who do understand this game. But as soon as you try to gradually phase anything in, once you make it clear, okay, this is the path we're going down, the professionals are 3 miles down that road. So the idea of phasing anything in gradually,
I agree with that.
It's
So
really hard
that's
to do.
why. It's a forecast I've been making since the financial crisis began, and people say I'm just nuts. But that's why exchange controls are the thing. If you try financial repression, the money will be out quicker than you can say Theresa May.
Yeah.
So people think that that's the policy that would come at the end of a financial repression. And ultimately, it's a policy that has to come near the beginning of financial repression. Now, in Europe, I think that's probably where it's more likely to come first. They've already introduced it twice. This is a single currency bloc with 2 countries that had exchange controls imposed on them. So everything's possible. And the political justifications are Europe is going through a major reconsideration of its constitutional relationship. It's deciding whether it's going to have fiscal integration or not fiscal integration. Now, against the background of that, we can't have the financial professionals front-running all of that.
Yeah.
And we need to put it temporary, because everything governments do is temporary.
Of course.
I think income tax, Pit
Yeah,
the
that's
Younger,
right.
Pit the
Yep.
Younger was a temporary measure to finance the war. Will be a temporary measure to allow the democratic process to work out the new relationship within Europe. So at the minute, nobody cares about this call for capital control, saying, well, it happens in emerging markets, happened in Greece and Cyprus. But you just need one market where people have significant liquid assets in there, and it changes everything. And that is the crucial thing about the global impact of this. If you deliquify a major asset class, which is what a capital control does, it's a deliquification event. As we know from financial history, that can be a solvency event for somebody. So that's why I think it's important. You have to rank things by their probability and their importance. I think this is probable, and I think it changes the 21st century. So I do this all the time, speak to investment managers about that, and they say, phone me up the day before it happens.
Yeah, exactly right, exactly right. Or if possible, the hour before they put it in, because that would give me a little bit more time.
Because we have to ride this to the end.
Yeah.
But I think, no, if you're a steward of other people's money and savings, and their savings for their pensions and their retirement, and you can't, you don't get to leave the party at 1 minute to midnight.
But and yet, this is something I find fascinating, because right now the environment has never been harder to manage money in terms of expectations of your investors. And underperformance, because in a world of zero interest rates or negative interest rates in some places, those 10 basis points of underperformance in any given month, which ordinarily is just a rounding error, people are phoning you up saying, well, what went wrong this month? Well, nothing went wrong. I underperformed by 10 basis points. It happens. So they don't have that latitude. So everybody's kind of getting desperate.
Well, I used to spend more time talking to hedge funds than I do now. And often they'd ask you the one question, the killer question that they save up, which was, I want to do something that's entirely different. I want to do something that's completely contrary. And you see everybody, you talk to everybody, tell me the one thing that I could do that nobody else is doing. And I would say, have you tried patience? And they say, well, obviously we can't do that. Any other ideas that you'd like to do?
Oh, what a smart idea.
Yeah. So, and obviously with interest rates at zero, you don't get paid to be patient.
No.
That's the problem. So therefore, the most valuable thing in the entire planet is patience. Because the rest of the system, the professional system, I don't want to call people who watch this program and manage their own money amateurs, because in many ways they know more than the professionals. But the professionals are themselves being gamed to have no patience. So if you're looking after your own money, patience is a virtue.
So where does this leave cash in this environment?
Now, define cash: deposits or notes?
Yeah. Well, coming back to that, this financial repression, the trial balloons about the banning of cash.
It's not.
Frightening.
I don't think it's going to happen. I mean, because there are so much easier ways. I mean, Colbert, the 17th century French politician, said the secret of taxation is to extract the maximum amount of feathers with the least amount of hissing.
Right.
Banning cash, you're going to get hissing all over the place. I mean, there'll be people taking to the streets, particularly in Texas, I suspect, more than anywhere else. But it's so much easier to steal money from people than banning cash. So I don't think that's going to happen. I mean, it's possible, but it's not one of the most probable things. When you can regulate financial institutions and force them to buy your government debt at yields below inflation, I mean, you're talking saving hundreds of billions a year. Why banning cash just isn't necessary? So I think in many ways, actually, that could be the fake play, couldn't it? That could be the fake runner. Everyone's watching Ken Rogoff charging through the middle of the field. He doesn't have the ball.
Well, it's interesting because that isn't such an extreme thing. As you said, it's not the easiest thing to do, but you have a generation now moving into their prime who think it's a great idea. I mean, you have a really healthy tailwind here. Millennials think, I can just wave my card, it's great. We come back again to financial history. People don't understand the ramifications. They think of this as a convenience. They don't understand it's a confiscatory measure.
Yeah. So I think I'm a little bit older than you, but I first came to London in 1976. It was a dump. And it was a dump. Obviously, it was still recovering from the war, but it was a dump because we had a financial repression. And capital wasn't flowing to the places that it needed to flow to. Now, there's been lots of downsides with taking those restrictions off, and we can see that in the excess amount of gearing. But it's allowed capital to flow in the right place. I'm old enough to have once travelled in a British Leyland Morris Marina. If you want to see the downside of financial repression, that's it. And everybody should have to be in one once to know that we had the best car companies in the world in 1939 and the worst by 1979. And of course, that was about industrial relations, but it actually was about the poor allocation of capital. So the millennial who says, hey, this is great, I don't have to have any cash. Well, there is another side to it. It's like the people of the Eurozone who said, this is great, I don't have to have I don't have to change my currency. And then they're only now beginning to realize the constitutional impacts of having a single currency zone. So this is due to financial illiteracy. We don't teach finance in schools, and I'm trying to do something about that. But financial illiteracy, people just go for the short-term convenience, which is a fantastic thing for the politicians.
Yeah.
Now, the politicians sell it as short-term convenience. They can get away with just about anything. So we see over and over again that these things are not there. I mean, these things are there to let the government have a hand in capital allocation. And if you tell someone that banning cash is that, they just wouldn't get it.
We're in Europe. Let's talk a bit more about that, particularly this idea of helicopter money and the crucial part in this that Germany is going to play. Because you wrote a piece recently, Wo ist der Hubschrauber? I'm not sure how my pronunciation is, which really struck me. And so I'd love you to kind of lay out what that article contained, because you'll do a much better job than I did. But I thought it was really important and something that not many people seem to realize.
Well, we're back to this issue of central banking and is it working? And obviously what's happened is the politicians have just thrown the ball to the central bankers because there's complete political paralysis. And let's not mince words here. Europe is in a period of political paralysis. Yeah. It's tearing itself apart. This so-called helicopter money, which is where the government sort of expands its fiscal spending, expands its balance sheet, and that is financed by the central bank, is a political act, a political decision, and needs political agreement. And it's different from central banking. This is one of the mistakes people make. They think, oh, that's a policy for central bankers, helicopter money. It isn't.
Yeah.
You need them both working together, and you need political consensus. Now, in Europe, political consensus means Germany.
Yeah.
The fascinating thing about Europe is if you look at the debt to GDP ratios for Europe, you look at the government debt to GDP ratio, you look at the private sector debt to GDP ratio, would only be one country in the whole of Europe that really doesn't, well, maybe a couple, small ones, but one major country that doesn't have to do financial repression, that really doesn't have to push growth up and debt down. And that country is called Germany. So you have this country at the center, which really is in pretty good shape, and not just from a growth perspective, but from a balance sheet perspective. I'm thinking of Deutsche Bank even as I'm saying that, but the private sector debt to GDP as it stands and the government debt to GDP are actually pretty low, pretty reasonable. So you're really asking the Germans to save Europe, to inflate away the debts of Europe, to follow a policy which, at least at the minute, they don't necessarily need themselves. And we all know the history of Germany and why they tend to be big on savings and low on inflation anyway, but actually they have a balance sheet that doesn't dictate it. So that's it. That is the massive conflict within Europe. Certainly Southern Europe needs a major dose of inflation or massively high real GDP growth, which seems unlikely. And is Germany prepared to deliver that for everybody of Europe? Because you couldn't deliver financial repression for Italy and not financial repression for Germany if you have the free movement of capital. Yeah. So one of the conclusions may be they might try to suspend that free movement of capital. But the crucial question is, I think Germany probably won't do that. And I don't know for sure. It's very hard to forecast because it's the Germans' worst nightmare. Yeah. To hold the Europe together, you have to do the one thing that you fear the most. And we're sitting here, and it's quite a long time since Brexit now, and it's still not absolutely clear which way Mrs. Merkel's going to go on that, and it's still not absolutely clear she's going to be here by Christmas either.
Well, I mean, people are making very strong assumptions about what she's going to do.
Yeah.
I mean, and in the article you referred to von Havenstein, and again, history. And then this is why I spend so much time trying to understand history. The precedents are all there. The bad outcomes are there for all to see. And as you said, this is something that's deeply embedded in the German psyche. And so, are people looking the wrong way? People assigning a probability to Angela Merkel's likely course of actions that is wildly wrong?
I think they are, and I think they have to begin to think a little bit like a politician and ask why the euro was created. Now, the euro was created. I don't subscribe to any of the theories that say it was a sort of German plan to take over Europe. I simply don't agree with that. But I do believe it was put together by people with the best intentions. It really was something about bringing Europe together. It was about integrating Europe, and it was about making Europe a more peaceful place. And I had discussions years ago before it came in with the people who were designing it, and they, no matter what I told them as to how it wouldn't work, they were absolutely convinced this is why it was being done. So let's say you were one of those people. Well, what's it bringing Europe? Orban? Kaczynski? Le Pen? You've got to say, is it worth it? I mean, no one thinks that that can happen. Everybody thinks that this is the European experiment. It is going to the end. It is going in one direction. The commitment is 100%. I question that because of what it's doing. It's saying to some peoples of Europe that if you want the state to be sovereign, you have to vote for someone on the extreme right or extreme left of politics. And as long as we continue on the attempt to make a euro work, which is with fiscal integration and therefore political integration, you will get more and more people saying, well, we want a sovereign state within a trading operation or whatever. And if the only way they can express themselves is going to the extreme right or extreme left, this thing is actually doing the reverse.
Yeah.
And I think some of the incumbents are beginning to buy that. Now, does Mrs. Merkel get that? I don't know.
But it's such a big, and I couldn't agree with you more. And this is what really surprises me. It's such a big deal for someone at that level of power inside the European dream, where we all have to stick together, and when it gets serious, you have to lie, and all these things to keep this thing together, and the things they've done to keep it together. For someone in a position like Angela Merkel's to say, this isn't working. I mean, that's a gigantic step to take.
I agree, and it may be a small chance. I just don't know. But I think for the markets just assume that this thing is just going to keep going in that direction is a big mistake, because even if it isn't the incumbents who say it may not be worth it, you still have the non-incumbents rising very rapidly through Europe, and this counter-revolution, which has been launched by the Poles, the Hungarians, the Czechs, and the Slovaks, is very, very important, because what they're trying to do is push the needle of fiscal integration back.
Yeah.
Now, economists don't agree on anything. I mean, absolutely nothing. But I think one thing they all agree on is for the euro to work properly, there has to be more fiscal integration. They wouldn't agree on how much, but they'd agree there has to be more. Well, these four guys just come over the Danube on their horses. They want to push it the other way. Now, when that begins to happen, you can't have a euro. The market, as you say, the financial professionals are way ahead of this, and they realize if that needle starts to go back, i.e. more power for the sovereign, less power for the centre, then that is the end of the euro. And I mentioned coming over the Danube on their horses. I'm kind of referring to their own comments, which if it's worth Googling this, because when I say this, nobody will believe it actually happened. But both the Prime Ministers of Poland and Hungary met at a conference just before the Bratislava meeting, to which they were asked by a journalist, you seem to be getting on quite well together. Orban replies, yes, we have a saying in Hungary that you can be friends with anyone you can steal horses with.
Right.
The Prime Minister of Poland replies, yes, and there are lots of stables in the EU.
Yeah.
Now, this is a European Union with a small u. A European Union, a union where people get on together, where they collaborate, where they make joint decisions. And it's very clearly beginning to go in the opposite direction. And that would become more apparent, obviously, if some of these incumbents or some of the rising extreme left and extreme right make progress in France or Italy.
Yeah, well, plus we now have a precedent of sorts. It's not a fully formed precedent in Brexit, but someone has said, okay, enough. And look, it was always likely to be the Brits because of the fractious relationship we've always had with Europe. And now that's starting to play out. And we've had this crazy campaign full of complete nonsense on both sides, let's face it. Now the reality's here. And we're in this kind of period where they're all trying to figure it out, and the pound's going through the floor and the FTSE's going through the roof. What do you see happening with Brexit? I mean, it's a tough prediction to make, but when you try and handicap those probabilities, what do you see as the most likely
Well, there's only
path?
one thing you have to forecast Brexit, and that's the European Union. There's nothing else to forecast. I mean, who is Britain playing poker against? It's a 2-year game of poker.
Yeah, with people who really dislike you.
But those people might be gone very quickly. In fact, those people, not only may they be gone as individuals, and Mr. Hollande is clearly gone, the European Union may not exist as the European Union, as this body that wants to push fiscal and political integration. It may actually be going the other way. So how can I predict Britain's relationship with a body that in 2 years from now could be entirely different? I actually think it will be entirely different. If it was a body that decided that it needed to go back more towards a common market and less towards a political and fiscal union, there's every possibility that Britain might stay in. We voted to leave something which is clearly becoming a political federation of Europe. If there's an announcement that it is never going to be because they've never told us what it's going to be. This is the crucial thing. Why have they never told us the ultimate level of political and fiscal integration that Europe needs? Because they don't know.
Exactly.
They don't know, and they wouldn't agree anyway. So maybe if they come out, make an announcement, say, look, we've realised that we can't push it any further that way, we might actually go back a little bit, then I think people of Britain voted against it, not just because of where it is, but because of where it was going. then we'd have another referendum. But I can't forecast Brexit until I can forecast them, and I would forecast, although it's for most people incredibly small odds, that they begin to shift in the other direction. And it's nowhere near as bad for Britain, but something is much worse for Britain, which is the end of the euro. Now, the global financial mess that would ensue if we began to unstitch the euro would make Brexit look like a kids' tea party.
Our great mutual friend Lee Robinson said something to me that really resonated. When we met and chatted right after Brexit, right after the vote, and I was talking about my thoughts, and he said, "No, you're not thinking like a mafia boss." He said, "You have to think like a mafia boss." He said, "And why would Britain start negotiations until they know who they're negotiating with?"
Absolutely.
And he's absolutely right. But that could be October. I mean, Angela Merkel is the key to this. I mean, she's the most important person on the other side.
Absolutely. But she will tell us whether she's going to run for political office, and she said she'll tell us in December. So you've got to wait at least until December, because if she's not there, everything is up for grabs. As we know, Mr. Renzi has a vote on the 4th of December. He's now said it's not a resignation issue, but there's certainly a possibility if he was to lose that. He may not be there either.
Yeah.
There's no point in talking to Hollande. He's a completely dead duck. He's out next year. So Britain absolutely has to wait and see who they're playing poker against. And I would, one of my strongest forecasts is 2 years from now, it'll be an entirely different European Union. Now, if somehow they pull it off and they become a much more integrated political and fiscal, then the United Kingdom has got big problems. Because clearly there has to be a lot of pain inflicted on the United Kingdom pour encourager les autres, as we say in Belfast. But I don't think that's the European Union we're actually negotiating with, but we don't know. So we've got to just sit and wait.
Well, you touched on Renzi in this vote. Let's talk a little bit about this Italian referendum, because it's something that nobody's really paying much attention to. It's largely a domestic issue. But again, it's happening at a time where every referendum is a vote against or for the incumbent powers.
Yeah.
And as you said, Renzi's walked back his threat to resign if he doesn't get his own way. Just talk a little bit about the implications of this referendum.
Well, the implications have changed if he's not going to resign. I think what's happened in Italy, and it's the whole political establishment, it's not Renzi, is they said the last thing we need is an election. Because the polls show that Five Star is going to win the election.
And this is the political party, not the band.
This is the whole constitutional setup. It's to make sure that people don't get the right to vote. Yeah. And it tells you everything you need to know about Europe. I mean, there is a political elite that believes they know better, and they want to stop the people having a vote because they don't agree with the vote. Now, whether I like Five Star or not is irrelevant. The point is the whole process. Renzi said, "I'll resign." He backtracked quickly because he realized what it means. So they're desperately trying to stop the people of Italy having a vote on this, and they succeed. I mean, they absolutely succeed. I don't think Italy's going to an election. But it doesn't solve the big problem underneath this, which is whether Mr. Renzi gets to bail out his banking system.
Yeah, and that's the crucial part.
That it doesn't matter who the Prime Minister of Italy is. Do they get the right to put government capital into the banking system without first bailing in the bondholders of the Italian banking system? That's the only question that matters. And the incumbent there doesn't matter so much.
So how does that go? Because this Cyprus bail-in, I was really surprised how quickly and easily that came and went without anybody really spending too much time on the wider implications.
Didn't care because they were Russians.
Right. Yes.
I mean that's basic. Right. That's the bottom line. They didn't care. So the system cares if there's a big, the system runs on big global institutional investors. If you bail them in, you've got a problem. Mm-hmm. But they didn't have any money in Cyprus. You didn't do any damage to the global financial system by bailing in the bondholders of Cyprus and partially the deposit holders of Cyprus. So that was a lovely little test case of where you could do it kind of in isolation without doing any damage. Now, just about anywhere else, you would do significant damage to the structure of the system, because what you're doing at the very least is deliquefying someone's asset. Now, in a geared system, that's a dangerous thing to do. If it's not a geared system, you can deliquefy anything you like, you can write it down, but if in a geared system you deliquefy an asset, you're creating problems. But because that system didn't have a lot of assets there, and because they managed to get out of Greece and sell all the paper to the state and the supranational bodies, it didn't matter. If it were to get to somewhere like Italy, that's entirely different. If we just take a step back in time to when Ireland found itself in a financial crisis and its banking system was in trouble, the Germans went a long way to make sure that the Irish didn't bail in the bondholders. Why? Because it was the global institutions that held it, and particularly the German institutions that held that piece of paper. Now they've changed their minds, or have they? They've passed the legislation. The legislation is very clear, crystal clear what has to happen. But at the same time, they realize what the potential implications are if you sort of write off the assets of part of the financial system. That's what we did with Lehman's, right? Yeah. With Lehman's, we said the liabilities of Lehman's are at least deliquefied and potentially not worth anything. They turned out to be worth something. That is potentially what could happen if you push this piece of legislation in force. Now the Germans say, well, we only passed it in January, we can't possibly not enforce it. But we all know that I describe European legislation as so slippery even Gollum couldn't catch it.
But that's incredibly naive, surely. Or did they do this knowing that, well, we'll have some wiggle room down the track? Because I can't believe they'd be that foolish, particularly problems in Italy. It's not a new thing in the last 8 or 9 years. This is not something that's crept out of anywhere. We've seen this unfolding. And when Cyprus went through that process, Italy was by no means a secure, sound system. Was it naivety? Was it expediency? What do you think made them make such a flawed set of rules?
Actually, it's very simple, because what happened after the financial crisis, they decided they needed one deposit guarantee scheme for the whole of Europe. And to do that, the Germans insisted on a couple of things. I mean, let's face it, one deposit guarantee scheme means the Germans pay. Mm-hmm. That's what it means. I mean, at least until recently, we thought the one banking system that was perfectly sound would be the German banking system. So if there were problems in Europe and the states had to put money in to compensate investors, that money would ultimately flow from Germany. So to protect themselves, the Germans insisted on two things, which is bank regulation would pass up to the ECB. And secondly, the liabilities would be bailed in. So that the government, yes, the state would stand behind this, but only after the private sector had taken its lumps. That's why the piece of legislation was put in there. Morally, absolutely right. I mean, morally, who could argue with that? Of course, these guys should take lumps. But as I said, the damage that can be done, not just to the Italian financial system, actually much more importantly to other financial systems. So we don't know whether they'll enforce it. Now, obviously the hope of most people in the market is that the problems at Deutsche will focus the mind of the German state on bailouts more widely than Italy.
Well, one would hope so.
And therefore, they would allow government capital to come in without inflicting pain on the private capital, and you wouldn't have the risk of effectively runs in the money markets. So we'll see. And one of the money markets people forget about is that euro-dollar market is huge.
Yeah.
I mean, would you, and you know what the interest rates are, I mean, would you be prepared to lend Eurodollars to an Italian bank at 1%?
No, I mean, of course you wouldn't. I mean, and this is the problem. I mean, this is a situation where, and I think Deutsche Bank is kind of crystallizing this in a lot of people's minds. This way too big to fail, way too systemically important bank that has now entered that spiral that these things go through, where its fate is almost taken out of its own hands and out of the natural forces of the market, someone in a position of power stepping in and doing something that people couldn't foresee amongst the normal.
Yeah, well, it's quite strange because the Deutsche Bank is really giving people reasons to be optimistic, because they're saying that the Germans will have to put government capital into this, therefore they'll have to let Renzi put government capital in, therefore we're not going to have a bailout. So it's the travails of a bank, and I know nothing about the Deutsche Bank balance sheet, I don't know what that balance sheet looks like, but just the very fact that the Germans might have to put money in is enough to get people more optimistic about Europe. But it's a bizarre scenario. I mean, I can give you the statistics for bank lending growth in Europe, the commercial banking sector. We've got loan growth to the private sector below 2% and to the government 12%. And people get optimistic about that and say, look, Europe's growing. Well, yeah, bits of Europe are growing and they're called the government. And now you're getting optimistic because the government's taking over the banking system. I don't know, how much of the banking system of Italy the Italian government would end up owning. You can't know that unless you really understand the balance sheet. And the more the government grows of Europe, the more investors get excited. I really strongly question. I mean, that's okay if you're playing a quarterly game, but if you're playing a long-term game, the idea that the rise of government is good for return on capital of private sector enterprise, I don't think so.
So let's talk about mistakes and now I have to get this, the library of financial mistakes.
The library of mistakes.
The library of mistakes. It's a project of yours which I read about last year, and I thought I have to go and see this thing. Just talk a little bit about that, because I'm sure many people won't know what it is, and it just sounds like such a fantastic idea.
Well, it's a room full of books.
Yeah.
I have to say that because most people under the age of 35 say, do you have books in the library?
Yeah.
And I have to show them my grey hair to prove that I've once handled and touched a book. So it's a room full of books. It is mainly on business and financial history, but it doesn't have to be. So I was struck by the citation for Kahneman for his Nobel Prize. And it was for helping the understanding of human decision making under uncertainty. Mm-hmm. And obviously Kahneman comes from a psychologist background. He uses that. I thought, well, there is another way we could look at exactly the same thing, which is study the history of human decision making under uncertainty. Very simple, But I'm a very simple kind of person. I thought, well, I don't really, when I've read Cannon's books, I understand something of this psychology, but I'm not a trained psychologist. But actually, history is much easier. So we built this business and financial history library there, and that is the reason that we can study that. But the crucial reason for building it is that this has been stripped from the university syllabus. Financial history is not on the university syllabus. And I think that's a great shame and a great loss. And the idea that you can come out of university with these bright, shiny initials after your name to tell people that you're an economist or a financier, and you've never read financial history, I mean, it just strikes me as just the strangest thing. Yeah. So we built one in Edinburgh. We're just about to launch another one in India, in Pune, with the Flame University. And if anybody's watching and would like to open a library of mistakes, it's like anything else in life. All you need is a large check.
Right.
So it is a charity. We run it as a charitable. It's not for profit. But if you have a check and you'd like to change the world one mistake at a time, let us know.
But let's talk. When you do something like that, and I know how important financial history is to you. We spoke briefly before we started filming about the fact that it's something that can't be marked. It's tough to teach. How do you get people interested? How do you get people not so much at the ground at the student level, but how do you get people interested in? Because I would think the events of the last 8 or 9 years should have sent people running to libraries to try and understand, the 1920s, the 1930s, the teens, what happened in the lead up to the Great Depression. How do you go about doing that?
Well, the first thing you've got to do is, if you run a fund management company, is you've got to set at least half a day a week for your fund manager to read something.
Yeah.
I mean,
that isn't Wall Street research.
That isn't on the Bloomberg screen. Yeah. Something. If you're not doing that, I think you've got them looking in the same direction as everybody else at the same time as everybody else. And it's not a wise thing to do. As you say, it's events, dear boy, that get people to focus on why they need to read this stuff. I'll tell you the most common question I have in that library. I'm standing in the library, someone will walk in, I love the library. What's the one book I should read in the library? People want instantaneous answers. And the problem, and that's why they don't read financial history. There aren't instantaneous answers. You could read a whole book and think, actually, it didn't teach me anything. So it's a different form and nature of commitment. And it's a commitment that most people are not prepared to make, particularly because they work these crazy hours. Mm-hmm. And those crazy hours are really what I would say is, following the rabbit in the greyhound race. Yeah. I mean, we all know where that rabbit's going. It's going round and round in a circle. If you want to do something different, you've got to stop following that rabbit.
I mean, how do you get away from the noise? How do you get away from the mainstream? I mean, do you literally just withdraw and sit quietly on your own and read, or?
Well, in 1998, I moved into the middle of the Scottish countryside.
That helps.
That helps. Edinburgh is a more reasonable, not that far from Edinburgh, but Edinburgh is a more reasonable place to have reasonable discussions that don't revolve around the last 3 stories on Bloomberg.
I reread The Lords of Finance recently, which has been one of my favourite books for years. And I'm just so struck by just how many parallels there are between that period in history and today. And I just think that, I've said this so many times, but there will be more books written about the last 10 years and the next 10 years than any event in world history since World War II, probably.
Yeah, I think so, because it's not over yet.
No.
Usually you have a financial crisis. Financial crisis ends and then we all go on. It didn't end. It just didn't end. It was postponed.
That's something that I find interesting, because when you talk like that, the narrative is, it's over, it's done. And I totally understand the reasons behind trying to get people to believe that and understand it. And we're in a situation where, if you're the guy that says, well, it didn't end, it's just been postponed, that's very kind of, you're out there, you're one of those fringe guys. How do you deal with someone with your knowledge of history that can see, okay, look, it's very clear that this didn't run its course. It was interrupted.
It's like, that sketch in Monty Python and the Holy Grail where he gets his arm cut off.
Yeah.
He says it's a flesh wound.
Yeah.
Gets the other arm, it's a flesh wound. You keep seeing people's arms falling off, and central bankers put a elastoplast over it and say, just a flesh wound. And what is that? The body corporate, the body of it's the global financial system itself. Is it become robust? I think a bit of it has. I think the United States banking system is much more robust than it was, and there's reasons to be optimistic about the stability of that financial system. But not the European financial system. The emerging markets have taken on far too much foreign currency debt. So what we do in financial markets is we tend to chase that rabbit, but we don't look at the structure of what's out there, and that's the crucial error. Global debt to GDP is at a new all-time high. It's gone up.
Yeah.
So we have had all those years of elastoplast, which is massive expansion of central bank balance sheet. Now, if the global debt to GDP ratio was coming down sharply, there's reason to believe that the body is being healed. It is being healed by the actions of central bankers, but it isn't. Debt to GDP is going up. And that's the fundamental reason why you say that's why that crisis didn't end. Now, it clearly changed a lot in 29-32. The structure of the whole system changed, and that hasn't happened. Yeah. So that's why I say it's a crisis that is still in progress, because we haven't fixed the fundamental fragilities in the system.
Well, no, I would argue we probably can't fix them without so much pain that it's not a decision anyone's going to take willingly, I don't think.
Well, the pain, obviously the plan for pain is inflation. That is obviously, and that's why I talk about financial repression, because inflation isn't enough. To get the inflation, well, we'd all be demanding higher interest rates from government and the private sector. So they've got to hold the interest rates down and create the inflation. So I believe that ultimately they will create that inflation. It is possible. It can be done, not with central banking, but with a combination of government and central banking. Now, that is very painful if you're a saver. But it actually isn't that painful for most people on the streets. If I go out onto the street and stop someone and say, the future is really for high inflation, financial repression, your wages will go up, but maybe only in line with inflation, but your debt relative to your wages will come down, and your debt relative to your property price will come down. But you realize this comes at a terrible cost for the efficient allocation of capital.
That's right.
So that inflation, actually, in the early stages of inflation, it kind of works. For the average guy in the street, it works.
Yeah.
But it's people who are watching this program who've got savings to worry about that really have to get. So the pain is not necessarily the great financial collapse, decimation of savings. It's much more likely. There may be that may be a catalyst to get something else going. But I think as a long-term investor, I see deflation. But as a long-term investor, you have to plan for inflation, because that is the only survivable thing for a government. I had a very interesting meeting with someone who was on the Bank of England MPC, and I was going on about this horrible thing called financial repression. Came up to me afterwards and said, "So you don't like financial repression?" I said, "No." He said, "Any other bright ideas?" Yeah. You're the government. You're the politician. What are you going to do? Austerity? Default? Hyperinflation? There's a very limited number of things that can be done here, and I think just inflation's is the go-to answer. Certainly for democracies, inflation is the go-to answer, and in the long run, that's what you've got to protect yourself against. So as an investor, you've not just got to call the pain. You do have to call the form of pain. Yeah. So I think initially a financial shock, deflation, but then ultimately high inflation. So it's a difficult one to do because there are two stages and you've got to be in two different things. But
well, look, we started with financial repression. We've ended with financial repression only because we've run out of time, because I could sit and do this all day. I think that comment is going to shock a lot of people, that there's this understanding about what financial repression is, how pernicious it is, but we're going to have to do it anyway. I mean, that's certainly going to make me think a lot about how these guys think. But Russell, the dollar, emerging market, there's so much stuff we didn't get time to chat on. I'm praying that our schedules align a bit quicker and we can pick this up another time.
Okay. Well,
thanks so much.
Thanks.
Thank you for watching this interview. This is just a taste of what we do at Real Vision. To learn more about the complex world of finance, business, and the global economy, click on the membership link in the description. Give us 7 days to change your life. This will be the best dollar you ever invest.